Markets can be three types of machine. They can be a headline-driven machine where any prominent political figure can move the markets by trillions of dollars as they tank the indexes by a couple of percentage points just by a tweet. The markets can be sentiment-driven machines where the uncertainty that's in the investor's mind can lead to them moving into more stable assets, can lead to them moving into treasury bonds, can lead them to moving into money market funds where they can just park their cash, earning a few percentage points annually. But then the third, the market can be confident. And when the market ignites with confidence, it moves straight into risk on. It looks for growth. It looks for the fastest horse. And this company that I talk about quite frequently on this channel, and it's become very focused because it is the only asset that I believe can run the fastest when the environment is risk on. It's got so many tailwinds, so many catalysts, and it's all about the fact that this company are starting to integrate a completely new business model into what is understood as a car company. The perception of Tesla as an EV automaker is actually the biggest opportunity of potentially the next 10 years. When this company turn on the robotaxi network, they start to show how they can vertically integrate their batteries, their cameras, and their computer software chips. They're going to be able to move at such a pace that any competition that currently in Texas, Austin, and in California, San Francisco, is going to struggle to compete and be able to scale their business model the way that Tesla can and make a profit. So in this video, I want to go into the simplicity that is Tesla. Firstly, looking at the macro and how that macro lid, once that has been removed, leads to so much opportunity and so much expansion within the economy. The federal fund rate is currently at 4.25. The neutral rate is about 2.5 to 3%. And actually that means that if it's under 2.5 to 3%, it's an expansionary economy. Currently it's above. So there's so much leeway for that to be brought down. And when it does, it will ignite so much pace in terms of the velocity of money moving into risk, and the fastest horse is Tesla. So if you like content on economics and signals and indicators, and you're also interested in exponential innovative companies like Tesla, leave a comment down below, notification bell. Let's get straight into it. Two parts to this video. There's going to be the macro insights, and then the second part is going to be the Tesla robotaxi imminent launch, which is going to completely penetrate a new market and the opportunity and the scalability for this going from June to the end of the year. Let's go. Tesla, just like most assets, is very sensitive to the macro environment. And this downward trending resistance line was forming on the daily chart. And the moment that it broke 289, it really acted like a catalyst to that next resistance point, which was around 350. Now, it'll probably take a breather around here and then move closer to the 400s as robotaxi FOMO starts to build. But you can see these resistance lines give you a really good indication of what are some of the targets, what are some of the near-term goals that this stock needs to penetrate in order to move on to the next step. However, the macro is starting to paint a very positive picture. You can see the producer price inflation on the monthly is starting to come down and go into negative territory, which is deflationary. This survey from Bank of America looks at the overcrowded trades as of May 2025, and you can see that dark blue bar is long gold. Most traders are 58% positioned for long gold. The market goes in contrarian to the majority of people, which is what I like about the long Magnificent Seven trade, which is only 22%. So if I would say that the Magnificent Seven is an undercrowded trade, Tesla to me fits into that as a equity that is more risk on. So it shows that there's still a catch-up trade for those Magnificent Seven companies, and Tesla included. This chart again from Bank of America shows that the majority of hedge funds are overweight European equities and underweight US equities. So again, there's a catch-up trade where the discrepancy between these two lines has a chance to narrow and close. Unfortunately, political bias is prominent in the way that the Federal Reserve make their decisions. They use surveys in order to direct monetary policy, whether they're going to be looser and quantitative ease or quantitative tighten. So you can see that this Bloomberg economics inflation data surprise shows that within Bloomberg's economic data, they are showing certainty. The economy is showing certainty. The inflation rate is coming down. However, if you look at the UMich expected change, it's shooting off into the sky. Mitch, is predominantly Democrat, which means that if they are seeing uncertainty, this is influencing the Federal Reserve's monetary policy, there is going to be a political bias in the environment within the economy in terms of potential growth. And this impacts growth assets such as Tesla. Part two is a quick overview of Tesla and just some of the simplicity behind this incredible infrastructure and economy that they are building, and then the robotaxi opportunity. Michael Dunn, who's a very prominent investor within Asia and understands Tesla from an Asian perspective, he talks about the simplicity of Tesla, and he brings up this Leonardo da Vinci quote, which is, "Simplicity is the ultimate sophistication." Tesla have built an infrastructure. They've built an economy of products that work together and synchronize together. They've got the supercharger network that runs throughout the whole of North America. So that eliminates any range anxiety that people have with electric vehicles. They're signing deals with other well-known companies such as Mazda in order to use their supercharging network. So they're becoming the oil and gas stations for other companies that are trying to move into the electric vehicle economy. Jeff Lutz puts it perfectly. Tesla are the perfect and the best in class at being able to leverage manufacturing to be able to produce at scale innovative products and make a profit. They already have done this with their electric vehicle venture. They're going to do it again with humanoid robots and then also scaling the robotaxi network. So they've already shown that they can do this. This chart shows the perfect visual of how Tesla using autopilot, Tesla not using autopilot, and then the average driver within the US. And you can see how Tesla using autopilot is just trending higher and higher, and that's that gray bar. And even the Tesla not using autopilot is showing real safety when it comes to traffic accidents. This next analyst is AJ, and he is basically the Ben Affleck accountant character, but within the Tesla investor space. He manages to find any potential discrepancy in data, and he is the best at doing this. He's managed to find how Tesla, as a pure EV manufacturer, have managed to show cash flow positive after going into the negative. However, every other manufacturer within the EV business is still trending lower and lower into negative territory, and they're not able to manufacture at a profit. A quick collection of different articles and headlines from BBC show that electric vehicles are dying. Actually, the data points in a completely different direction. So you can see actually how in the China market share, ICE vehicles are trending down, internal combustion engines. However, plug-in hybrids and hybrid vehicles and battery electric vehicles specifically, which is what Tesla operate in, the green, is going higher every single year. And then globally, the battery electric vehicles are trending higher every single year. And the one category that's going down is actually the internal combustion engine machines. Tesla open up a completely new market when they bring in their vehicle that costs under $30,000. They open up a 50% market share, a new consumer. So again, this just paints the picture, builds the foundation of what this company are going to become. Another really interesting insight is how they've managed to manufacture their Model 3 for $54,990. They're able to match the lap time of a Ferrari, which costs $427,000 US. Tesla proving to be the best in class at manufacturing, at being able to leverage their factories, is going to hopefully paint the picture for what this company are about to do. They're entering into the robotaxi network space. The data that I've collected has come from Cern Basher, ARK Invest, and also Uber. I want to really just focus on this completely new way of looking at a business model. Instead of the amount of cars being sold, you're looking at how many miles are being sold. So this introductory message from Tesla, which is with the robotaxi network, your Tesla will be able to earn money while you are not using it, essentially paying for itself. It will go to work just like you. If you can deploy your Tesla into the robotaxi network whilst you're not using it, this is going to open up a completely new opportunity for the consumer and change the depreciating nature of a car into an appreciating asset that could be a fleet of business opportunities, a fleet of cars working for you whilst you're not working or using that car. So this chart from Uber points to the opportunity of what you open up when you bring the cost of 1 mile to under $1. You are going to open up $1 trillion within the US market of people who wouldn't usually use ride hailing services. They'd use public transport. But if you can get the cost of a mile under $1, you open up a completely new focus of consumer. They're going to be able to see this as an economic benefit to their life. Cernbasher brings some of the most visually simple charts to look at. And you can see within this one, you've got Tesla robotaxi has not yet been deployed. Waymo, which is a self-driving autonomous vehicle retrofitted with LiDAR technology, extremely low volume of vehicles. There's not a lot of them. They don't make a profit on their vehicles. They cost $180,000 each. They are currently 16,400,000 within this miles driven within the US. And then Uber are about 33 million. The opportunity is this green bar, which is 3.251 trillion miles that no one has managed to truly penetrate. And this is what Tesla's robotaxi is moving towards. 3 types of ramps, again, from Cernbasher: slow, medium, and aggressive. If you look at the slow ramp, they're going to be able to take about 20% of the market by December 2025. If they go for a medium base ramp, they're going to be able to take about 90% of the market. And if they go for the full aggressive ramp, which is bringing volume in terms of their cybercabs into the network and deploying other Tesla users into the network, they'll be able to get to 150% of the market share within the ride-hailing opportunity. AJ again manages to bring extreme nuance to every single profitability model that's been put forward when it comes to cost of miles driven. He is able to see that you could actually bring the cost of miles within a Tesla ride-hailing robotaxi service down to 15.9 cents. And if you can do that, you want just under $1, you're going to open up trillions of potential market share that doesn't yet exist. With the robotaxi network, it opens up other opportunities, package delivery services overnight, entertainment services, the ability to implement and synchronize Grok 3 into the cars so that as you're going to different services, Grok 3 can actually start to curate an experience that's perfect for that rider, for that tourist opportunity, for that destination that you might not know you want to go to. Grok can curate that for you, that experience. So how could all of this be relevant? If you got any value from this video, please like, drop a comment down below, hit the notification bells. I will keep this one short. When you bring the cost of a mile down to under $1, and Tesla could bring this down to as low as 15.9 cents, it opens up a completely new view of transportation. People who may not have considered public transport in the past would now see it as economically beneficial to actually use public transport rather than own a car. And when you start to disrupt car ownership, that's when you start to really create so many exponential opportunities. The way that cars will be used in the future, the way that deliveries will be made, overnight deliveries, the congestion on the roads as cars are constantly moving, they're not parked in spaces, the way that this opens up green spaces in cities and metropolitan areas, and just the cost of the transportation industry for the consumer. Would you take an overnight flight if you're able to go to sleep in a car and stay on the land, stay on the ground? You're going to start to reshape the way that you drive, the way that you are productive. And if you have a car that is able to self-drive and you can deploy it to this robotaxi network, it's an income source that you may never have had before. An appreciating vehicle becomes extremely hard to model when it comes to currently just an EV business where cars depreciate, they get sold once, and then in 5 years, you'll probably get a returning consumer. So, hope you got some value from this video. Get excited about the robotaxi launch, which is in about 2 weeks, and we'll see what the stock does. It most likely sells off, but it's not about that. It's not about the short term. It's about what does this company do over the next 6 to 12 months. And I believe in the next 6 to 12 months, this company will successfully penetrate the trillions of dollars that are going to be unlocked when you bring the cost of a mile down to under $1. See you in the next one. Thank you very much.